Hello and welcome to another week of Finance Talk with myself, Sapphire. This week's topic is cost to consider when purchasing a rental investment property. Each week I bring different topics based off our blog that we distribute every Monday. So go ahead and look at our full blog that we sent out this week, Monday. Every week we'll share a different blog topic and I will do a breakdown of that as a recording for you that goes out every Saturday in our finance talk show. So this week, as I said, our topic is cost to consider when purchasing a rental investment property. So rental income. The process of searching for an investment rental property can be very exciting. However, before you get too excited, it is important to run the preliminaries and run the numbers to make sure that everything stacks up. Make sure you know exactly what you're facing and getting into so that you have a successful investment. First, you need to carefully examine potential rental income. If the property has already served as a rental property, you need to take the time to find out how much the property has rented out for in the past, and then do some research to determine whether the amount is the right level or not. Always do your due diligence on a rental income, and how to do this is actually contacting a letting agent within the area in which you're considering to buy that property, and do 3 comparisons, because that way it will allow you to see what your property can actually rent for. Because some previously rented properties may have been low rents and is now due for a rise in the rent. So always check out what the going market rate is for the rent for that property. Looking at comparables in the area. In some cases, many properties have rented for lower, as I just said. They have a while. In some other cases, properties are over rented. Look at the comparables in these areas and make sure that you know whether the property in question is at the right level. Otherwise, you might find yourself overpaying for a property, which is not a good thing when you're investing in property. Cost cutting you should consider. Now, there's a lot of ways that you can do cost cutting on bills. If you are doing a HMO, you can cut down the bills, electricity bills, gas bills, and water bills. You need to talk to your suppliers on how to reduce costs. Also, the amount of money you're spending on marketing your property. Again, see where you can cut the cost on that so that when you're buying your investment property, you know where you can make cost savings. Could you manage the property yourself? That could save you 10% without having a managing agent. I'm not saying not to get a letting agent to let out the property. That takes off some of the burden, but could you manage the property yourself? These could help you cut the cost. Mortgage interest. Mortgage interest is another area you should consider carefully, making sure that you know and understand the prevailing interest rates as well as the details of your specific loan. Because mortgage interest is the biggest cost you will face when purchasing an investment property. Many homes and flats, duplexes tend to have loan structures that are likely any mortgage loan on this property could be a higher rate. So always make sure that you're getting a good favorable rate. So I always say go to see a broker, a finance broker that can actually work out what the best rate for that purchase that you're looking at. If you're interested or in looking at investments in commercial properties with even more units, the matter of terms and rates is completely different. So if you're looking at residential, that's going to be different to if you're looking at commercial properties. So make sure that you get the advice and the right advice so you know what you're getting into and knowing what you're going to be having to pay each month. Typically, the more money you can put down on a purchase is the more savings that you'll make on what you're paying back on the loan. So we are effectively leveraging the bank to purchase your property, but the more deposit you can put down, in which is a standard industry at the moment, is 25% and 75% loan to value that you will get from the lender. But if you can pay a little bit more towards that, then your rates and payments per month will come down. Taxes. Taxes is another issue. Many people use taxes from the year in which the property was purchased to assume that they can use these figures to estimate expenses. This is not always the case because taxes do not remain the same. They frequently change every year. Generally, taxes go up after a property is purchased. This is especially true if the property was previously owner occupied. So it's typically a good idea to assume that your taxes will go up on a property after you've purchased it. But I always advise to consult with a specialized accountant in property so that you know that you're tax efficient when purchasing your rental investment and knowing what your outgoings are going to be. Should you consider wrapping the property up inside a company and paying corporate tax instead of self-employment tax? See a professional to work out the best structure for you and your business when you're buying an investment property. So another area is the cost of the property being vacant. One area which many people fail to take into consideration is the cost of the property being vacant. While you could certainly hope that the property would remain rented at all times, this simply isn't realistic. There could be work that you're wanting to do in a property, so you have to leave it vacant. It could be a tenant that's just moved out and another one hasn't moved in, and that could be a 6 weeks or 2 month gap. So you have to consider these costs as well. There's probably times when your property will be vacant. Generally, you should assume that your property will have an average of 10% occupancy rate as well. So make sure that you really do the numbers on this. How much are you looking for occupancy, and make sure that you have the savings to cover those months where your property is not rented. The cost of the tenant turnover. The cost of the tenant turnover should also be taken into consideration. This is also a big surprise to many people and landlords who assume that they will rent out their property and the tenants will remain in the property forever and for some time. And wouldn't we all like that? Even more surprising is how much it costs to prepare the property to rent out again. Just a few of the costs include advertising for a new tenant, repainting, cleaning, etc. If there's a need for internal damages to be repaired, again, this is a cost for repairing, and it should be fully, this may not be covered by the security deposit, or it may be if they've damaged the property. And it's definitely not covered under your insurance as well. So make sure that you have a pot saved for when your tenants moved out so that you can cover the cost of repainting so it's fresh and nice for someone else to move in. I know there's many landlords that don't ever sort of refresh the property when each tenant moves out, but I like to do that. So when someone views the property, they instantly want to take on the property because it's all fresh and new looking. When you've got a tenant looking at your property, always look at how you see the property. Would you live in a property with wallpaper paint stripping, wallpaper stripping, or things just hanging off? You wouldn't want to live there. So don't allow your tenants to view your property like that. Bring it up to a standard where you know this is home to them and they would want to stay there for long periods of a time. The cost of insurance. The cost of insurance should be taken into consideration, keeping in mind that the insurance for the investment property is generally higher than an owner-occupied insurance. Make sure you obtain a quote, 3 quotes if you can, rather than just using insurance costs for your own home as an estimated guide. In addition, make sure you take into consideration not only property insurance, but also liability insurance as well. Because anything happens inside of your property with one of the tenants, it's your liability. It's going to come down on you. But if you're covered by insurance and you've protected yourself, then this is a good way to start becoming a savvy property landlord. Utilities is also frequently underestimated. If the property has already served as a rental property, make sure you find out exactly what the owner pays for and what the renters pay for. You should also make sure you find out whether you'll be responsible for the cost of other costs such as trash collection and things like that. So make sure you understand your utilities. And if you are the one that is covering it, make sure that you can reduce that cost by going getting free quotes from different suppliers and reducing it by putting in either meters so you can monitor it, and also allowing your tenants to know that by cost savings on the utilities will also help them as well. Property management. Finally, take into consideration the cost of a property management. If you're not managing the property yourself, consider doing that, because it could also save you money. So this is just a quick whistle stop tour on getting into property and what the costs you need to consider when you're buying a rental property as a landlord. Remember, you can reach us via email for a free discovery call to discuss our topics on finance talks. And if you liked what we shared today, please comment in the feed and I'll get back and answer any questions that you have. We have a webinar coming up on the 23rd of August, which we will put out in the feed, a link to. It's a free webinar, and it's talking about property as well, how I got into it and how you can build up your property business in 90 days. If you'd like to come on and see me show you how you can build out a property, start your property business even in 90 days, I'd love to have you in the audience, and then you can ask me questions there as well. That's on the 23rd of August, this month at 7 p.m. and it'll be live on Zoom. And I would love to have you there in the audience, and then you can ask any questions. The link will be in the comments, so feel free to click on and register for the event. But if you want to just share anything else with us, you can reach us on Twitter, Facebook, Instagram, and YouTube at 50 Savvy Women. It's been lovely sharing our thoughts with you today about landlord's costs, and I hope you do consider them. And don't get yourself into unnecessary debt to cover these expenses. Any questions you have, please feel free to share. Have a lovely day.